All right, so John, tell me this. I've got people who they're waiting for rates to go down, and I'm telling them about what a resilient market this is and what appreciation is like. What do I say to them? How do I combat them just sitting back and sitting on their hands and waiting for rates to go down?
So I have a couple of questions for you, and I've got a little spreadsheet that I did. Let me pull it up here. But let me just ask you a few questions. What's the average sales price in your area today?
$540,000 is the average price.
And on a conservative level, what do you think homes will appreciate, in and around your area over, let's say, the next 12 months?
Let's use 7% as a number.
Okay. What I've got here is just a little spreadsheet, right? So I put in, if somebody's buying a house today in your area and it's 540,000, and let's just use that they're going to put 20% down, right? They'd be putting 108,000 down. They'd have a new loan amount of 432. At an interest rate of 7%, that's about where we're at today. They'd be paying $2,870 in a principal and interest payment. If we say that appreciation is going to be 7% over the next 12 months, I think it's going to be way higher, but let's just say 7 is a conservative number. That same home that's 540 today is going to be 577,800. So by waiting 1 year, you're giving up $37,800 total. And you give it up a couple of ways, right? Your new down payment, instead of bringing in 108, you're now bringing in 115. Yeah. So you're bringing in more money. Your loan amount went from 432 to 462. So almost $38,000. You're going to save. Yep, you're saving $392 a month. The struggle is real, but you're going to go through and not buy a house today to save $4,700 over the next 12 months to then ultimately spend $37,000 more. So this is the equation. And if there's two things, if you have two beliefs, one, that homes will continue to appreciate, the bigger this number, the more it makes sense to buy today. And if you believe that rates are going to come down at some point in the future, that's the only premise that you're not buying. Well, when they do come down, there's nothing preventing you from refinancing, and you'll have like a delta between the two of like $33,000. You can buy a lot of points on a $432,000 mortgage. Right? You can buy 7 points. So it's just a no-brainer. This is the math that people fail to see. They see this 392 number and it freaks them out. But what they need to see is this $37,000 number. And that's where we need to do a better job of educating people and showing this to them.
There are clients that I've worked with who didn't buy a house, John, that would be sick if they saw this, because in some of the areas where they were looking, appreciation could be anywhere from 12 to 14%. And that with that appreciation, it makes that math even more compelling.
It's a no-brainer if you understand that home values are going to increase. They've been doing it for a long time. There's some dips, but if you look over a long enough curve, home values keep going up. More institutional buying, all those things factor this. I say it all the time. Now is the very best time to buy a house, and homes are on sale. That is how I would sell that right there. Look at the appreciation.
Can I use that?
Yeah, I'll send you the spreadsheet.
People can wrap their heads around that here because they know like those appreciation numbers aren't fluff down here, and that's real.